Market Buzz. Today's episode is going to be an interesting one. Everybody freaking out. Markets giving out all the gains. The year turns negative. Bitcoin goes to the lowest levels since a really long time. Is this a buying opportunity? We will tell you in today's episodes what we're doing with our portfolios. So make sure you stay until the end. Don't forget to hit the like and subscribe. Ladies and gentlemen, it's been sucky. It sucks to be an investor for the last couple of days. Well, I guess since last week. Traders are making money. Adrian is here with us. We also have Timothy, Assi, Dimitris, and Nestor. We are freaking live. I'm freaking out a little bit, which tells me I should be buying. We are sitting at a very interesting resistance level. The news continues to be good, and we are getting negative moves to the downside. Hello, Adid. Hello, Graham. Hello, Mimi. Mimi is joining us from the chat because she is in a first world country with third world internet. Insanity. Usually that's me, but turns out this time around, crazy. But we will have her soon in the episode. Today's episode is going to be a little bit of stocks, a little bit of what we're doing, what opportunities are we finding in the markets. We're going to share with you a couple of our trades. And last but not least, Bitcoin, Ethereum, what is happening with that, and the rumors that are going on. Are we going to war? Is World War III here upon us? In today's episode. So, yes, welcome everybody to another episode of Market Buzz. Freaking hell, today is a great day to be live. You know, we've had major earnings. We had Google yesterday. Capital expenditures increases to $175 billion. Insanity, just insanity, right? And the market seems to be stepping away from the Mag 7, from the tech play, and rotating into everything else. Even Pepsi is sitting pretty. So Timothy wants to share something here. This were the random picks that we had at the start of the year. You know, and this is where we are right now. Pepsi leading the game. Then we have Google, even though they've had is the blue line Google?
No, that must be Novo.
Yeah, right. And then green line is Google, and then First Solar. I've just been steady. You know what I mean? I've steadied now negative 13%, which is fantastic. At least I'm constant. At least I'm not going under more. I have a feeling we're going to be seeing a shift in that, but hey, Pepsi to the moon, baby, to the moon.
Year's not over.
It's not. It's just getting started, and that's the beauty of investing. You know, it's like what we see one month might not be the same as the other. So, yeah, what are you guys seeing in the markets that is like keeping you awake? Because, you know, my sleep is not being the best, and the last couple of days has gotten a little bit worse. But I just don't see a further decline. But I could be so wrong. Because like we've barely gone down. That's the beauty. The Mag 7 have taken a massive hit, but the rest of the market is still holding strong. So it's definitely a rotation. Even the equal weight is doing well. So yeah, insane. Who wants to talk it first? Who wants to give their 2 cents on what's going on?
All right, so let me take this. Let me take this because every time the market has a 5% drop, I'm talking about equities, not crypto, 5% drop, then everyone assumes the worst. Oh, this is .com bubble, and this is the bubble, and all that usual talk that we get when the market goes down 5% on the Nasdaq. The S&P is down 2%, 3% from the highs, so it's not a collapse as a lot of people say it is. But if we think and compare what is currently going on compared to the .com bubble, we're comparing the Mag 7, which all of them are profitable. All of them beat earnings estimate quarter after quarter. I mean, NVIDIA is like 13 out of 14 times. This is not .com bubble. This is not pets.com that it was like pre-revenue. So if we're going to compare the .com bubble with this, at least let's be accurate, right? Okay, so let's say we are in a bubble. If we analyze that, I don't think we are in a bubble, at least not in everything, only because, again, the companies have earnings. They beat the earnings estimate. And just because the stock went down in the aftermarket because of the conservative outlook, that doesn't mean this is a collapse. Google just last night announced a 50% increase in capex. 50%. This is like in the hundreds of billions. And if I'm guessing correctly, Amazon is going to announce something similar tonight, and everybody else beat estimates, and then the stock went down. And so what? So for me to change my thesis on that we're going higher, and this is just nothing more than a correction, that actually a very needed correction, so we can just reprice assets. I want to hear from the Max 7, because the AI story, basically it's them doing the spending. It's not the moms and pops stores that are buying AI, the big guys buying the AI chips. I want them to say that we're not going to increase capex, we're actually going to slow down capex, or we get into World War III. So it's either one of those two, or we're going higher. And this is just a correction, a pullback, a correction, whatever you want to call it. And in the meantime, yesterday, and to finish this, yesterday I was not stressing at all. I was upset with myself because I'm seeing this carnage happening, and I wasn't able to do anything about it because I didn't have any cash. I don't hold cash. So I took some profits and increased my position in AMD and in Microsoft. 25% from the top and 35% from the top. So when this thing happen, these pullbacks and corrections that they feel worse in the tech, you're either gonna watch it and sit on your hands or do something about it.
Yeah. No, it's been super interesting just how beat up the Max 7 are, and just what has been working for the last couple of years has shown a lot of weakness into this. And we will continue to see like the rotation from the winners to the losers. I mean, we are in prime position. We don't have to pay taxes right now. At least the Americans don't have to, right? You know, for another 12 months. So it's like it's a great time to be rebalancing and moving forward. Like we're only 5% in the NASDAQ. It's only a 5% downturn, 6% downturn yesterday at the peak, right? So it's like, could this go lower if this was like a true correction? Yeah, we could go down 10%, right? February is expected to be a very volatile month on a year, like on usually on year to year. So it's like, yeah, volatility is here, right? Like we had momentum to the upside. Now we're having momentum sideways, right? But we still range bound. Like we haven't broken significantly these levels. And yeah, there's a lot of fears that have come up since last week. We've had the Fed, we've had the Fed nomination, we've had the Iran US tensions, we've had the AI and NVIDIA feud, an OpenAI feud. We had the fears of the Max 7. All of this are just fears that we've had in the past that have sort of resurfaced back into the question here, right? And obviously, it's affected everything, right? Like we've seen risk off sentiment in cryptos, we've seen risk off sentiment in the big winners. But again, we could continue to see it as like the volatility is here, right? Like the one of the reasons I wanted Trump, which I bring this up, is yeah, I want to try because he gives you trading opportunities, and there's opportunities right now popping left, right, and center. I agree with you. Having cash on the side to be able to deploy in those is key, right? So yeah, I mean, Timothy, what are you seeing in markets that sort of spooking you? Because I know that you saw this coming from a mile away, at least with the Pepsi trade. So
the same thing I was watching on consumer staples to see them going up, I'm now seeing the same pattern into the software sector. Because what's really happening here? There's a lot of fear that AI will disrupt the software companies, and markets can be one very overreacting. So they're basically saying AI is gonna disrupt software and we won't be needing it anymore. And secondly, the market is also forward looking, so that means that's how they see the future, that software is going to be disrupted in the next 6 months. On the other side, if we look at guidance of earnings, they're only moving higher. So there is this divergence of what the investors are thinking the companies will do and the analysts that are analyzing how earnings will be uh, growing in the next couple of months. So I like it when there's this much of difference between one and the other side. You have to know that because I'm using a lot of AI, these AI tools are used within software. It's not that the software is suddenly being replaced. Let's give an example like Adobe. Adobe, I was talking to a friend yesterday. He's a designer and he uses Adobe all the time. So I asked him, like, are you gonna use, let's say, Google Nano Banana all the time to do your edits? He's like, nah, I'm using Adobe all the time, and I've studied all my life to use Adobe, and this is like the software that is the all you can do all in software. So I'm not gonna move all my knowledge just to one AI platform. Um, Adobe is now using Google Nano Banana within their software. The software is using the tool to make the software even better. And that's what we're seeing in other softwares as well. It can be in finance, it can be in editing, it can be in more cybersecurity. So everything is selling off. Everyone is throwing their baby out of the room. Right now, it's an emotional trait, and people are freaking out, but you have to stick to the fundamentals, and the fundamentals are showing us that this is a mispricing, and we never know how low it will go. But I'm betting on the reversal, because it's the same thing we saw last year with the Liberation Day. A lot of tech stocks got sold off because of the fear of tariffs. They were fearful that the companies would earn less, especially tech stocks were sold off, and we saw the contrary. After it was clear, tech stocks just rallied for the next months of the rest of the year. So that's something I'm watching closely now to have a big position into software. I'm watching, of course, Microsoft. I've been buying. I just bought some because my order got triggered in the pre-market. I also bought Salesforce. I bought more ServiceNow. I bought S&P Global. So these are all software companies that have a wide moat, are strong, continue to do well. But there's just a lot of fear out there. And for me personally, I think it's misplaced. And yeah, just like Dimitris said, now is the time to behave. Don't look at the risk, look at the opportunity. And if you look at the opportunity, it's going to help you much more as an investor than always looking at the risk. Because those that look at the risk, they will never press the buy button. But you have to learn to press the buy button and look at what it might gain you instead of what it might lose you. So that's what I want to share.
Yeah. No, it's super interesting because we almost have like a dual storyline, right? On the one side, we have, oh, AI is going to disrupt anything that's coming with software. All the current software structure is going to disappear because AI is going to take over. But then the data center plays are not like, they're like getting hurt because it's like, oh, they're not going to be able to create enough money. But it's like, if they displace all of the software companies, would they not be able to make some of that revenue back in another place? Right. So sometimes in the markets, we have this converging stories that are coming one another because it's interesting. For example, like somebody's talking, Mohammed, I want to say Mohammed is talking about, for example, iron, right? Now, iron is an interesting one because it's a data center play, right? They're a finance company going data center play. The question is like, will we see the compute? And every single hyperscaler is telling you that they are compute constrained. So usually the way that this plays out, the way that the cloud used to play it out, right? Google does this. Every player does this. You buy, like, you start very low to gather the client, and when the client has all of the data with you, you rack up prices. That's what will happen, and that's the reason Meta is building their own cloud, Google is building their own cloud, Microsoft has their own cloud, because it's like they don't want that to happen to them. And that's the play here, you know. So we are going to be compute constrained at least for 2026. And the big players are telling you, you know, the people that created Google, Meta, Microsoft, they are the best at what they do, and they're seeing this. They have the clarity to make this investment. So at least in the AI play, this is bullish. Like, I think it's bullish, and we're just seeing profit taking and looking at different places where we can take advantage of the gains right now. But I want to talk a little bit on crypto because Mimi's in the chat calling Bitcoin at 48, which would be
Hey,
crazy. And I
Nestor,
think Adrian
just
agrees with
one. I
that.
had a
So
comment to make on the software side of things, because I agree with
yeah,
both Timothy's and your outlook on it. I think the market is, reacting emotionally, and also they're not pricing in the key differences between different types of software, right? There's consumer facing software, like we saw LegalZoom drop, it's down 15% this week. But then you also have enterprise software, right? Your SAPs, your Oracles, your Salesforce. Those software, they're ingrained within the corporate mesh of corporate America and the world, right? Those software are not going to be easily replaced by AI. No large scale corporation wants to run their own CRM, their own ERP, right? So those types of software, they're pretty safe, right? Obviously, they're big corporations. They have time to kind of adapt their business model and integrate AI to improve their product. The other type of software is that's pretty safe is the ultra specific software, right? For example, let's say in the utility space, software that manages assets, that manages their work, that's specifically built, custom built, or custom configured for their specific needs. That software, again, they have a long time to adapt and integrate AI into their software, and we're starting to see that. And then, as you mentioned, Nestor, the other one is kind of like the infrastructure plays, right? Even things like AWS, right? That's not going away. If anything, that's going to continue to grow. So I think right now it's a good opportunity to look at software companies that are going to survive and potentially even get stronger. There is some risk on some smaller players or more consumer facing software plays. For example, LegalZoom is a good one because anything you can do in LegalZoom, you can probably do 80 to 90% of that today using every version of ChatGPT. So I just wanted to point those differences out as well.
nice. No, the thing is like it's super interesting because the CEO of Microsoft says this, right? He's like, "Yo, the thing that we are investing in compute and we're investing in the data in the cloud and we're investing, but even if it doesn't work out with the AI thing, we need the compute. Like we need it anyway. So it's like we're just increasing a little bit more because obviously there's this new demand with the LLMs and all the different things. But it's like the problem keeps going back to the idea that AI is only the LLMs, and I just don't see that. Like there's so much more. LLMs are less than 5%, I would say, at this point. But
Yeah.
you know, you have companies like Palantir breaking quarter after quarter. Like like the expectations are, even though the expectations are high, it's like we continue to see this. But now, the big elephant in the room, because I know there's a lot of people waiting on this, and I want to get this is for Timothy and Adrian. What the fuck is going on with my Bitcoin? What the fuck? God damn it. Because Mimi called the 48K insane, and it's like it looks more and more probable at this levels, it's like, and then Ethereum 1005 to 1008, XRP $1.25.
Yeah, it's a normal cycle that's playing out. I think there's a lot of people, especially earlier on, that were saying 4-year cycle is dead, super cycle, we're going higher, name it, whatever you want to name it. Every single cycle, those calls repeat themselves, and every single cycle, those calls are proven wrong, without exception. It's happened every single time, and I'll continue to trade and invest based on it until it breaks. But so far, it's played out every single time. So there's no reason to think this cycle is going to be different, and can't try to be a hero and think that something else is going to happen, right? I remember the first stream we had here, it was actually the Saturday after the October 10th event, right? At that point, we were still around 117,000, and we had discussions around how do you define a bear market? At that point, I wasn't there, and you can go watch the video, minute 38 if you're looking for it. But saying that I had sold all my alts a month ago, right? And then I was saying that 108 and 100K, and then Timothy was saying the same thing, were the key levels to watch to essentially validate a bear market trend. And that's exactly what we've seen here. Ever since we dropped below 100K, yeah, we were in the range between 80,000 and 97,000. But once we broke those levels, we continue to go down. Now, I think a lot of people, including myself, expected to see some sort of relief rally from the 80,000 levels, maybe to 97, 103K. That has not happened. And now we've broken below that 80K level, below now 70,000. I personally expect it to go all the way down to 64,000. 67,000 is another all-time high that provides a little bit of support. So we can see it there for a little bit. But especially today with the S&P also looking like it's going to be another red day, at least 0.5% down already in pre-market, it's likely to go down even lower. So I'm just looking at the moving averages, especially in the 15, looking at the 50 MA and the 15-minute to see at what point do we kind of get a little bit of relief, maybe test back up to the 74,000, and then potentially continue that. But as long everything's selling off right this week, metals down, stocks down, crypto's down. Crypto has been weak in general with relative weakness. So until everything else doesn't start to stabilize, we're going to continue to see crypto go down.
Yeah, it does feel like risk off sentiment throughout, right? Like it's just even Bitcoin, but the thing is I don't keep up too much with the alts, but like Ethereum, I was quite shocked at the Ethereum move. I'm not gonna lie. Timothy, what are your
Alts are
thoughts?
getting wrecked, and they'll continue to get wrecked, because that's what they do in bear markets.
Okay.
So I got a lot of questions, people asking on eToro on private messages, like, for example, XRP, what should I do? The coin is down below $2, and I'm still holding. So you should know that any altcoin in a bear market can drop 70, 80 to even 90%. And people think now that it's dropped, let's say how much, 60%, people would think, okay, this is value, I'm gonna buy. But they don't realize that dropping to, let's say, 90 cents was what Mimi said, or was it 125? But I was saying 90 cents from the beginning. That's a 75% drop. But buying here, so here to that 90 cents level, that's another 30% drop again. So imagine you're putting 1K in it, you're instantly losing $300. So you have to be careful on when to buy, and just buying a falling knife, because all these altcoins, they can continue lower. For the people that are just holding altcoins, I mean, I'm not in the camp of saying you should hold them, but if you are, you have to accept that this is something that could happen, where it just drops another 30% and even lower. And if you're willing to go through that storm, then it's all fine. But I prefer to basically sell here and then use that money to buy more later, because it's almost guaranteed that the market is going to bleed lower. Yes, we will see counter trend rallies, but that doesn't change the fact that Bitcoin is still in a bear market. And as long as that trend is intact, we will see most of the altcoin market bleed some more. So let's talk about some targets for Ethereum. I do agree with Mimi, because she was saying 1,500, and I think that's definitely a level to watch. So that will be here around this last swing low, and it's not far away, you know. So right now 2K, so it drops another 30%. We will there by the end of the stream. So if you're holding altcoins, I mean, accept that it could drop another 30 to 50% by the end of the cycle, the bear market cycle. And that's due for October 2026 if everything aligns with past cycles. So I would only be watching altcoins once we are near the half of the year. That's where I start looking again at crypto as a high opportunity play. And between half of the year until October would be the best period for me to start looking at altcoins and Bitcoin again. And if you're playing the 4-year cycle, I mean, uh, last time I was buying at 30K and also at 16K. That's maybe a big gap, but at the end of the day, if you sell at 100K, that's still a decent 3x. Okay, so you can do the same. You wait for, let's say, 60K to hit or 50K, you buy, and then it drops to 40K, you buy. But then in the next cycle, if it can get, let's say, to 160K, that's 4x, and you are outperforming the stock market.
Yep.
But you just have to be sure to buy at the right time, and I think the right time will be in the second half of this year, not in the first half of this year.
Yeah, I agree 100% with that. The other thing I want to point out is you don't have to FOMO in. You don't have to, go in like you're. I think we've been as in bull markets, we've been kind of psychologically configured to be in this buy the dip mentality, right? Once we are in a downtrend, in an extended downtrend that we are now, we need to change your psychology and not be in this buy the dip, right? Because it's going to continue to go lower. So if you see Bitcoin now at 69,000, alts at their lowest price they have been in years, you don't need to FOMO into it because we're likely going to see lower prices. Even if we get a relief rally in the short term, we're still going to see lower prices later on the year. And then two, it's not going anywhere. Even after Bitcoin and alts bottom, you're going to see an extended period of time, could be, 2 months, 3 months, 4 months, 6 months in some cases, right? Where they're not doing anything. They're just trading sideways, and you have so much time to accumulate those coins that you don't need to FOMO in, right? Are you going to catch the absolute bottom? Probably not. But are you going to be within that range? Yeah, and that's what matters. It doesn't matter if you miss the bottom by 10, even 15, 20%, if you're getting a 5, 10x from those levels. And you're mitigating your risk, right? So you're not going in when it could possibly keep dropping lower. And then you reduce your opportunity cost of just having that capital tied in altcoins that are either in a loss or just moving sideways for that extended period of time. So don't FOMO in, let the market play out, have some cash ready to deploy. And then once kind of things settle a little bit, then you can start DCAing a bit more. That's kind of how I'm playing this.
Nice. No, the thing is like there are opportunities right now. Like it seems like the opportunities are coming left, right, and center. And like they will continue to come. The thing, I always keep going back to the idea that people think, oh, this is the lifetime opportunity. You will never get an opportunity. And I always end up seeing prices go back down, and it's like, oh, there you go. That's your opportunity right there. But some people don't, right? Like don't prepare for it, right? It's almost like you have to like when the harvest is done, you have to actually harvest your crop, and then when in moments like this, when you can actually start, this is where you start planting the seeds. Maybe start dollar cost averaging a little bit. Sure, maybe you take a little, but maybe don't put all your eggs in one basket. Diversify and see where that goes. But yeah, okay. Let me ask you guys, and I want you to keep it a little bit short because I know Timothy might have to leave soon. I don't know how your time is, Timothy. Okay, tell me what's on your desk? What are you paying attention to next?
So yeah, besides software, of course, um, yeah, I think I'm gonna continue watching the Mac 7. I mean, if there's gonna be a correction in growth, that's where you want to position to, because it's always growth that is leading the bull market. And there's no such thing as small caps or healthcare or I don't know which sector leading. It always comes back to growth leading again. And we said it last stream as well. The last time we were able to buy the Mac 7 was during the April shock last year. If we get such an opportunity again, I will be buying the same stocks again, because in my opinion, if you have your eyes on a few of your favorite stocks and they are fundamentally strong, it's the best thing to do to just keep on buying the same stocks, because they are likely to just continue trend higher. I'm talking about my favorite stocks like Google, Nvidia, Amazon, basically the Mac 7. And also because cybersecurity is definitely hammered, I'm looking at Fortinet and Palo Alto. So those are like kind of the stocks, sectors, industries that I'm looking out for.
Okay, nice. Okay, do you have to leave, Timothy?
Yes.
Okay. Make sure to check out Timothy's portfolio in the links below. I don't even know if they're there because I don't know if I put them, but I'm sure Simon did because he's the best. So, yeah, we'll share with you the our picks, Timothy. But yeah, software right now is
Bye,
looking
guys.
appealing. All right,
Bye, buddy.
Bye,
all
Timothy.
right. I'll put you in the background, Timothy. Nice. Okay, who wants to go next? Who wants to go next?
Go ahead, Dimitris.
All right, so let me go. Okay, so like I said at the beginning of the stream, yesterday I took some profits from Goldman Sachs and Tesla, and redirected them to Microsoft and AMD. So I think I'm good for those now, but I have in my sights Nvidia, Amazon, which I already own, is looking to increase. Even though Amazon reports tonight and buying before the report, it's always it's a no-no for me. But Nvidia looks on a range that it looks like a good deal. You're buying on a discount, you never buy the all-time highs. And the new position that I have, I'm starting to look more interesting to me, and I'm looking into it, is Netflix. I know Nestor posted the other day a message on the chat that you will never invest in Netflix, but
I hate it.
I know I know you
I
are.
hate it.
I know you are. So I'm into that now. I haven't issued a position yet, but it's looking more and more interesting. I think it's like 25% from the highs, but I like because it's defensive and growth at the same time. And we want growth, we want performance, but we don't want to get killed in the bear market or
Yeah.
in a drawdown that is more, are you really going to cancel your Netflix subscription? I don't think so. And they have 325 million.
Did you check out the website I sent you?
You didn't send me a website.
I put a website. When I talked about Netflix, I put a website.
Okay, yeah.
I put a website. And you should I cannot say it because I don't want to get in trouble, but you should check out that website.
Is it like the Chinese version of
It's not Netflix, it's Weflix. I'm just gonna say it. Weflix.to. Check that out and tell me if you will like Netflix after that.
Okay.
Just add an ad blocker. just add an ad blocker.
Okay, so my answer is yesterday was Microsoft and AMD, which I both owned. I'm looking Nvidia and Amazon, obviously, and AMD is the bonus one.
Okay. Now the thing is like, yeah, even the AMD move, I was quite surprised, but I think there is like a misconception on the AMD earnings, which is very interesting with my pick, which is Fluence. It's like we are waiting the results to come in halfway through 2026. They're still not to come for AMD, so like the market sold them off like they will never come back and they'll never sell another chip again. It's like, it's just panic. Like everybody trying to get to the exit so quickly, right? And it just feels like it's bad news on top of bad news on top of bad news on top of bad news, right?
Yeah, but
Adrian,
but you have to compare it with Microsoft. So if Microsoft got a 12 down, then everyone gets a 12 down.
yeah.
So the 17 is not that bad. Sorry. So that's what I want to say.
Yeah. Adrian, what's your pick?
So,
What's on your desk right now?
I mean, it's kind of hard, right? Because everything it's kind of looking not so great. But I have actually a slightly different outlook. So I do think that this year, especially in the first half of the year, we're going to see an extended drawdown in equities. So my pick is UTHI, which is a 30-year bond ETF. Returns
We
about
talked about it the
four,
other day.
4.5% per year. And instead of just holding cash, right, you can hold that. Also, if we get a slowdown in the economy, that the rates should go down, right? At least the long end of the curve should go down, which means that on top of that 4.5% you're getting in interest, that should also go up, right? Because now it's more valuable to hold that at 4.5%. So that's kind of my unpopular opinion. I do expect to see some sort of drawdown in either March or April. I think we do bounce from here, but then we see a drawdown in March and April. The other plays, right, that are good right now, and we've seen this happen already, is energy, right? A lot of the oil and gas players are going up, and this is because oil has been so low. The price of oil has been so low for such a long time. They've gotten so good and so efficient at being profitable at those levels. Now, with oil prices even going, from the 50s up to the 60s, we're not even in the mid 60s yet, right? I do expect oil to go up to, test the 70 level. You're seeing all that extra increase in oil prices. That's just pure profit for them, right?
Yeah.
So energy, oil field services, it's good. There's an ETF OIH, which is a really good one. It is a little bit.
What is it?
OIH. It's a Van Eck ETF.
OIH.
Sí, yeah.
Sí, dale. Okay,
OIH. It's a little bit overextended. I do think oil takes a little bit of a breather over the next 2-3 weeks, and potentially during that time we see stocks recover and some of that money flowing back into stocks, like tech stocks, software, and so on. And then we see another pump from oil into the 70 range. Obviously, energy stocks are going to continue to do good. But yeah, for me, especially, I'm playing it very defensive once we get into March. And if we do put in another all-time high in stocks, I'm basically going, 80% plus in cash or long-term bonds. Now, I have to say, I'm more of a swing trader than a long-term investor for you guys, compared to you guys, right? So just keep that in mind. I'm actively watching the market and making these plays. So, I mean, I do believe in everything Dimitri's saying. Amazon, by the way, is a really, really good stock that has been suppressed for a long time. There's a lot of selling from, Jeff and the wifey, So after that selling kind of slows down, I think we do see Amazon explode up. It's been basically flat for the past 12 months.
Adrian, I have a question for you because you're in America. Do you have Amazon Prime?
I do, yes.
And do you watch Amazon Prime shows?
Only if I have to.
Okay, and do you pay? You don't pay.
It comes with your Amazon Prime subscription. So I wouldn't necessarily pay for Prime Video by itself, but I get it because of Amazon Prime. Yeah.
I have a question for you. Okay. I just realized that Amazon was doing this, right? And I don't know how long it's been going for. So you might just be able to tell me this. I was trying to look for research and there's just none. Amazon started there's 3 minutes of ads in an Amazon fucking TV show, which is fucking outrageous.
Yeah.
But the thing that caught my eye was the fact that now you can order directly from your TV. How long has that been going on for?
I have not seen that. And I got my
I'm
TV
telling you,
last year.
Go to Amazon Prime. Fucking after this, go to Amazon Prime and check that shit out. Because it's like if you haven't seen it, that tells me that it's like I have a feeling that these motherfuckers like added this recently, and they have a direct line to fucking impulse buying.
See, so you're saying basically, let's say the Super Bowl is on Sunday, right? And then they have ads, and then you press OK to buy now.
Add it to your cart. That's it. You know?
Okay.
It was fucked. Like in the UK, they started doing this shit in my dad's TV. It was like, dude, it's 3 minutes worth of fucking ads, and I can buy it right there. It was insane. I was like, what the fuck? And it's a fucking perfect model. So it's like, I don't fucking know. Like this, like the fact that you're telling me is like I'm fucking probably buying more Amazon for the earnings. So it's like check it out. Go to Amazon Prime and put whatever show. Put Fallout, you know, or whatever. And then every time you go in, they're gonna show you 3 minutes of ads. Fucking check it out. It's crazy.
How much it costs for the Amazon Prime per month?
Honestly, I don't know. It's like 80 bucks, I think.
Yeah, $80 a year.
Yeah.
And then it's like it reduces your shipping to zero pretty much. So if you order a lot, you can benefit. You also have like additional benefits on like I think they're starting to do like groceries and stuff. So for example, here in the UK, they do groceries, same day delivery. In America, I'm sure they do same day delivery. I don't know if they've pulled back from that.
No, they do. For some products, depends. Yeah.
Of course.
But usually the standard is like the 2-day delivery.
For us is 1
day. I think
for us it's
I would say most people have it here in the US. If you can afford it, you have it and then you just forget about it. It's just there.
Like it's like because the thing is you're comparing yourself to going to the market or going to like it's like that's a couple of hours of work. And I know in America it's like work.
It's like even without the Amazon Prime, it comes like within like the day or the day after. So most people buy the Amazon Prime when the Amazon Prime's day come close. So you want to buy like a lot of stuff on a very discount. But yeah, Amazon. I just looked at it like before we went live. It's been going sideways for 12 months, and the performance in the last 3 or 4 years, it hasn't been spectacular.
It's been good. It's been good. So I think a lot of it has to do with the selling.
Yeah.
Right. So Jeff wants to buy his yachts and whatnot. Enjoy his money. So
the ex-wife is selling stock and giving it to charity.
Exactly. So it's been artificially been suppressed, in my opinion. It's got to explode at some point.
Adrian, I know that you have your eToro account. Are you posting on it?
I should, but
okay. And then when you start posting, we'll share it in the links.
I bought some. Yeah.
We'll share. You bought something? So you have a portfolio? Okay, make sure to check out Adrian's portfolio in the links below. I still not at it because I don't think I have the link. I don't think I have.
That's fine. I forget what I even have in the portfolio.
Send it over because I know there's quite a lot of people that are like I know Toby really wants to have a look.
Toby wants to make 50% of his portfolio to be in Pepsi.
Yeah,
not bad, insane, honestly. If we get a decline, Staples, they're gonna run up.
Like he called like Timothy has been calling the markets crazy. Like Timothy has had his pulse on, like he's been on fire. That Pepsi trade, I was like, there's no way. There's no way. But yeah, I mean, yeah.
I mean, when there's uncertainty, what do you go to? Right? You can't go to gold and silver anymore, precious metals. They're in that decline now. You go to energy, staples. So Pepsi's it's a no-brainer.
Yeah.
And Walmart. How about Walmart?
Yeah, awesome.
Are you shopping from Walmart?
Nestor's favorite.
Are you shopping from Walmart or you're not or you prefer Target?
Well, I don't really shop like that. But I have a Target like 5 minutes away from me. So it's more of like where you live and what's closer. Also warm. You likely choose Target rather than Walmart in some cases. But if you're trying to get more deals, Walmart. Yeah.
Yeah.
Walmart is a free for all. He's Walmart is third world country markets. Like,
they are like
for the first one.
They are like in sketchy neighborhoods, and then you have to go there during the day. Target, you go inside, it's clean. You can go during the
You
night.
should look in online. There's a Instagram page that's called People of Walmart. That will give you an idea of what Walmart is like.
It's insane because I think if you add a Costco to your neighborhood, the average earnings of the neighborhood increases. And then if you add a Walmart, it decreases. So it's like net negative. It's super interesting.
Costco is also a good play, I would say.
But it's so expensive right now. It just feels so expensive, and
But
their
everything is.
online, yeah, but their online play, I just don't like it right now. So it's like I'm staying. I'm keeping it on a hold. There was an opportunity to get in around 900, but we'll have to see how just they continue to sort of like play it out. But the one that I've been riding a lot is Target. I actually entered a position around 90, and it's been treating me well. And it's still
Eli
sort of
Lilly
like
too.
Yeah, Eli Lilly, but Target has been the one that has been like treating me really well, and I do think that like the forward P's, it's like the fundamentals are looking a little bit more solid. And if you get a change in management or sort of like a change in strategy, I think you could see some benefits there too. But yeah, it's just been lagging so behind, and they've had so many bad news on top of bad news on top of bad news, right? That is like, I think that they got oversold to crazy levels, But
Now, so if you go back
again,
to that the heat map,
yeah,
you'll notice what we just talked about, right? Kind of the flight to safety, the flight to
yeah.
the staples, right? Eli Lilly, Walmart, Costco, those are the green ones. PG,
Yeah, we've seen this is the month to date, and we've just seen sort of
energy.
like it's just been a rotation. Like I don't think it's even a correction. I wouldn't even call it a correction. I think it's been a rotation of the markets, and the S&P tells
Yeah.
you that, right? The RSP tells you that, right? I think the RSP is actually still sitting close to all-time highs, right? Which is the equal weight S&P.
That's a new all-time high today, right?
A little bit, yeah. Let's go to the intraday.
Yeah.
Wait a second. Okay, I'm in the wrong thing. All right, that makes sense. Am I streaming the
I mean, software
screen?
has just gotten so beat up over the past
Yeah,
few
well, it's
months.
getting shorter. There are stories that there's actually active shorting in software plays. So it's like the question is what do we when do we see a sort of turnaround of the shorts?
Yeah.
In
Hey,
this case,
we haven't discussed precious metals. So maybe we want to
if you
go
want to, I'm
into that a little
down.
bit.
I mean, you're sort of like because me and Dimitri's done. I fucking hate gold. Fuck gold.
There's more
I
than
have a
just
song
gold,
out.
but I do think it has peaked, right? I rode the silver train for a long time, made a lot of money, good money, easy money, honestly, if you ride those trends. But now it's flipped, right? So now it's the other way around. You can short on every pump. So yesterday or earlier this week, I shorted. It went up to 92. I got in at around 91, closed it at around went down to like 84. Uh, Good short trade. And then yesterday it went back up to 90 or 89 and then dropped within like 2 hours down to 75, which is just insane. So lots of volatility, lots of bounces, dead cap bounces. But I think the longer trend has been broken. The structure is broken. And right now we're in a period of extended consolidation. I think silver has peaked for the year. Gold probably, but if something's going to put in a new all-time high in terms of precious metals, it would be gold versus silver. And then I do think we see it come back later. Maybe it starts coming back up towards the end of the year and makes new all-time highs this decade or so in the next 2-3 years. So it'll be a good play once it starts going to lower levels to accumulate both gold and silver. Now, there's also things like copper. Copper tends to increase as we get into closer to a recession. So that could be a play, but it also will drop quite heavily. And then other non-metals that I'm playing right now is uranium. I think there's going to be, I mean, there is already an increase of demand for electric supply, and there's not the infrastructure to deliver power to, say, data centers or points where of high demand is not there yet. Utilities are not going to be able to keep up to build out that infrastructure. And we're going to see things like, for example, Bloom Energy, right? Which is, it uses natural gas but also we're gonna start seeing more the use of small nuclear reactors to power data centers. I think that's maybe like a couple years out, if not shorter time frame. But uranium, I think, is a good play right now. It's not really a metal per se, but it's more of a commodity at this point.
Hmm.
Man, it's been
Yeah, it was the reason I wasn't like interested in the gold and silver trades. First of all, I don't trade commodities, but even if I was, it wasn't this move up. It was so violent. It had nothing to do with fundamentals. It wasn't like we worry about the dollar and all of a sudden we have to buy gold to protect as a safe haven. No, it was just speculation. Perhaps the whole move started because of that, but then everyone joined just because it seems like an easy trade, and then a lot of people got caught
Yep.
into. I mean, that's what happens, right? And then you see the moves on any given day, 20% up, 20% down. I mean, you have to really know what you're doing to jump into that. So yeah, that's
and it tells you the
It was like
craziness
the
of the
Bitcoin
moves.
run in 3 months.
yeah,
Yeah.
yeah,
And like in market cap wise, we're
yeah,
talking about I think we deleted the size of Microsoft as a market play, as a market cap play in the gold markets in a day, which is insane to
yeah.
think
It
Yeah, at
about.
some
was,
points we were getting rid of we're moving the market cap of Bitcoin within hours.
Yeah.
yeah.
So
Let me say one more thing. Let me say one more thing, and then I'm gonna leave you guys. You guys remember when was it, like a month and a half ago, 2 months ago? We were just chatting on Discord, and we were discussing the natural gas trade. And I asked Adrian, "Is there any storms in the U.S.?" And you said, "No, not so far." And then everyone went to shit, and all the stores that came on at once. That was the trade of the last 3 months.
Yep.
yeah, the nat gas trade. I made
I think
money with
Nestor,
it,
are you
and then
still in it? I
I
got
was still
out.
I left one contract. I left one contract, and it erased so many. Like I had that contract at 1,000% gains, and now I have it at 200% gains, and I'm sad because I could have made 1,000% gains on that one. Like I made money off the trade. Don't get me wrong. Like that was just like the last contract. I had already taken profits. I'd already assured, But yeah, it was just, and I feel like we could see it potentially bounce a little bit more just because it's like we've just seen the volatility everywhere, but it's like I don't know. Like right now, I still don't fully understand what the story the market wants to tell me is. And like research tells me that it's like still the same story. And I think it's just fatigue from that story that the market is seeing. So I just don't know. Like if
I mean,
it's like if
natural gas has a natural like resistant point around $4 because it's so easy, especially with shale production. It's so easy to ramp up production, right? So once you start seeing prices above $3.50, there's gonna
yeah,
be some production units that just go online, and then they're gonna sell because it's like, oh, they you see like it's like gold, It's like, okay, now I need to produce more, but it takes you, weeks, months to ramp up
to just
production rather
increase
than
production.
years.
Okay.
Yeah, but yeah, Demetrius, I went in that. It actually went down before it went up, and then I doubled down on. I think it went under. I don't know what the bottom out, but it was like $2.5. And then I doubled down. I think I got most of my sales were around 3.6, around that level, 3.5, 3.6. But it did run up a little bit more after that.
Yeah, it was
But yeah,
like we were just talking, and we all came to the same conclusion that perhaps it was the natural gas trade, not the oil trade. And then everything came together. You see that
yeah.
the storms came out of nowhere, and then there you have
What
it.
one thing, since I was in that trade, I started getting into looking at like weather reports and weather
Yeah, yeah,
models
yeah,
and
yeah, yeah.
forecast models. I mean, it is if you do understand those models, it's a bit of an edge that you can have if you want to trade natural gas markets, honestly, because it seems so obvious. At that point we didn't know it, but then the more I got into it, the more I went down the rabbit hole of looking at these forecasters and different models, and it was like a week out, and they're saying hey, we're seeing colder than expected temperatures. We have this winter storm, and it wasn't really priced in until like 3 days before.
Yeah,
So it was
which is crazy.
surprising to me. Yeah.
Yeah, because usually you would get at least an idea of, it's not like it's so different commodities to like stocks and crypto. Like each one market just it's its own demon in itself, right? It's kind of crazy. Kind of crazy indeed. Okay, anything else you guys want to add? Any questions you got? I know that Graham has a question about the McRib chart, but is the McRib in McDonald's, Adrian?
It's still on.
Nope. I don't
No?
think I've ever tried it.
Okay, let me know. Like keep an eye out because there's an indicator that says every time the McRib comes out.
Nestor, you want to pull up? I want to see MicroStrategy.
Hold on. You want to talk about MicroStrategy? This is a rumor mill, by
Just
the
a
way.
little bit.
Everything that we say is not financial advice. This is just our personal
It's not.
opinions. Make sure to check out our portfolios down below. Don't forget to hit that like and subscribe. 50
Because
people watching.
I was calling for. I was actually shorting a MicroStrategy back when it broke below 300, and right now it's at 120. I don't know, 5 or something, right? Which is just crazy. One of my
Ooh, they have
not
earnings?
conspiracy theories, but my more
Oh, they have earnings today.
kind of crazy ideas is one of the capitulation events in crypto that where we could see Bitcoin fall under 50, potentially into the 40,000s, might be something like MicroStrategy finally making their first Bitcoin sell, which it won't be, they'll survive, I think. It won't be that crazy, but it's just the news of MicroStrategy Sailor sells Bitcoin. That headline is going to scare a lot of people. And that might be one of our kind of capitulation events that pushes us. Like we can wick down to the 40,000 level, right? But I mean, look at that. We're at what? You can't really see the screen. 129, 128. And it is like continuous decline from those levels. There's a little bit of a bounce, but I mean, no sign of recovery yet.
No, not yet. I mean, market just opened, so this is interesting. Google dropping quite a bit. Whoa! Google doing a Microsoft. Holy.
Almost.
So yeah, Google down
7%.
7.78%. I'm just baffled by this.
All right, so let me go then. Let me check what's happening in the market because the shit show continues.
Shit show continues. I swear, man.
Gentlemen, it was always a pleasure.
It was a pleasure indeed. All right. Thanks so much for watching, everybody.
Chat.
Much appreciated. Thanks for popping by. If you have any questions, don't forget to leave them in the comments or leave them in our eToro posts. We're more than happy to answer. Thanks so much for watching, everybody. Peace. Ding, ding, ding. Markets are open. The crash continues.